Welcome back for another Top Notch video. This week, guys, we'll be talking about the yearly stock review for the Top Notch channel. We'll also be talking about the weekly stock review for TSP and Roth IRA brokerage accounts. We'll go through those accounts, then we'll go over my brokerage accounts and individual stock picks for the year. If that's something that interests you, you could maybe write in the comments below that you want to see my individual stock picks for 2020. Finally, we'll wrap it up with some real estate and what I did for my rental property for this year, and kind of give you guys realistic results of what you can expect for a property. So diving right in, the first thing we're going to look over is the funds. So with this channel, we go over the CSI and F funds for the TSP, or if you are in brokerage, Roth IRA / retirement accounts, we go over the ETFs IVV, VXF, EFA, and AGG. They follow each other, so they're very good indexes. This one here follows the S&P 500, small caps, international markets, and the bonds. The I fund or EFA will be changing this next year. We're going to have it follow a different indice. When I have more information, I will let you guys know. That being said, we're going to dig kind of into our overview and then go more specifically with each one of our charts. So starting with the TSP this year, guys, this week we are basically kind of just in the we had 2 down days for the most part towards the beginning of this week. I'm kind of doing this as an overall review total. So when you look at this, don't look at it as for the full week. This is just for Monday and Tuesday. Overall for the year, though, as you can see, the reason we have to do this is because they have their totals up for the year. The F fund gained about 8.68%. The C fund was over 31%. S fund over 27%. I fund 22%, and our life cycles even hit the 20% range. Very, very good year for the TSP, and you guys can see that on our chart as well for the yearly chart. Kind of how our strategy went this year is we had such a downturn in the beginning of the year that we really grabbed the first little bit of this in January, and then we were out of markets for a while, missed this decent gain in Q1 here, and then kind of struggled our way along, made good gains off of this kind of downturn we had here in the April-May time frame, and then picked it back up towards the end of May. And then we also gained the July, this July downturn right here. So we had 2 downturns, which we did really, really well on for Top Notch. And then towards the fourth quarter, we had a really good rise with the funds, and we missed out on that with our individual account as we stepped into the F fund. So overall, funds were doing very, very well for this year, up quite a lot for the most part. And I was impressed. I didn't think I was going to see that much gain in the fourth quarter for this year. If you guys remember last fourth quarter, we had kind of a down fourth quarter, so it was kind of tough to judge and see what we did for that. But we went with it, and that's what we did. So that being said, let's get into some of the commentary, and then I'll go back to the yearly talk. So with the commentary, this is from the TSP Talk website. Tom does some comments here. As you can see, this fourth quarter has been really, really impressive. We've been in this small trend line moving up for the C fund / IVV fund this whole way through. Really, really good gains. We'll have to see if we can continue that into 2020. But at some point, these are going to have to digest, so we're just kind of waiting to see where that will happen. With the S fund or the VXF, another really good rising channel here. Not too bad, as you can see. Really hoping to see maybe a little bit of a pullback here in the beginning of the year so that we can capitalize. We're currently on the F fund right now, if you didn't know. Trying to capitalize a little bit on that. EFA or the I fund was also doing very well. Kind of a wider trend line here, but still above the moving indices. This 200-day moving average is moving up, so that's really, really positive and really successful. And then finally, our last thing we have here is AGG. We saw this bull flag kind of forming in the beginning of December. We decided to jump on that and see how it would go. It did break out a little bit, but it really hasn't gone anywhere since the beginning of December. So kind of disappointed on that. We are above the moving averages. We saw some of the other bigger charts start to break down a little bit, so that's why we jumped into the F fund or AGG bonds. And that really hasn't played out too well for us for the month of December. Getting into our individual charts, we'll go and start with IYY. IYY is a general market overview fund. With that being said, we'll kind of monitor that and get into that. We like to look at this because it kind of gives a market picture of all funds. As you can see, we are above that trend line on the top here for IYY. really extended above the moving averages, above our trend lines. Hoping to see some resistance here and continue moving up after this, but this is a long ways down. Just keep that in mind if we were to fall. For the technical charts, we are moving off that oscillator just a tad bit. As you can see, it's starting to move down just a little bit here, so we want to be cautious of that. Usually we don't want to be caught on the other side of the wave of IYY because that is the general market fund. If you were in any equity funds or basically since the beginning of, I would say, October, was a really good place to be for IYY. As you can see, really good market movement. Had some tippy tops here, but it's continued to move up for 4 weeks in a row. Finally, starting to see our first week down. Keep in mind this week is not finished yet, so we'll have to wait and see where that goes, but that is our first kind of warning sign. We had one back here a little ways, and markets still continued higher after that. Waiting to see what will happen with that. That's our on a long-term basis. On a mid-term basis, as you can see, topped out here. Kind of waiting to see where that will go with IYY, and then finally on a short-term basis, we are in the negative. We want to be careful with that moving forward for a short-term position. Moving on from our IYY fund, we're going to get into IVV, or the C fund. With the C fund, as you can see, also very extended above its trend lines, above its moving averages. Kind of wait to see where this goes. This was ever since October, guys. This has just kind of exploded upward. Pretty impressive, even with the impeachment going on and tariffs and everything else. This has really gone up more so than we thought it would. We thought we saw more of a drop here in December time frame. That's where we entered the F fund, and it just continued to climb. On a technical basis, with that chart, IVV, on a long-term basis, as you can see, we are starting to decline just like IYY, just a tad bit, so please keep that in mind. That's a good warning sign. Our big indices are starting to tip with that. We want to be careful with being in equity funds. On a midterm basis, our oscillator is also falling just a tad bit. We still have our moving average, which is that blue line, or I'm sorry, the PPO line in the blue line, which is above our moving average, so that is good. But we are getting extended. As you can see, this market has been moving up for quite some time. And then on a short-term basis, the market is down, as you can see here, in the red here with our oscillator, and our PPO line is below our moving average, so we want to be careful there. Moving on to VXF, or the S fund. With the S fund, as you can see, we just had some volatile months here. Did very well in the Top Notch channel, picking up these volatile months, and then we missed out on this last one in September-October time frame. Didn't quite hit it right, missed it, and then didn't gain this gain in this fourth quarter here. That really hurt our percentages, which I'll show you in a minute. Overall, for that fund, VXF, the oscillator is on its second week down, so that is definitely a warning sign. Want to be careful there. PPO line is above our moving average, but the oscillator continues to move down on a long-term basis. On a midterm basis, we are also starting to move down. The PPO is about ready to cross. Now back here, we didn't see that cross, and it led to some price gain up here. This is our price up here. Did pretty well with that, but we want to be careful when watching our indicators. And then on course, on a short-term basis, we are negative. So we could be moving out here for VXF, but we want to be very, very careful in regards to that. Moving on to EFA, International Markets, iFund. The iFund is also very extended. It looks like it's been above this line now for most of December, so that is good. Acting as resistance. Was really hoping to see it break into the 70s towards the end of December. That did not happen for EFA. On a technical basis for EFA, one thing we want to be careful with on a long-term basis is the chart is been in a decline for quite some time. Now, even though this chart has been in a decline for a while, like we said, we watch oscillators and we watch moving averages and PPO line. These indicators don't always tell us everything that's truthful. As you can see here, our oscillator is moving down and price here is continuing to move up. So it hasn't worked out super well for this time. Most of the time it does work well, as you can tell when we have our indicators move down. Price tends to move down. But for EFA this time around, it did not work. On a midterm basis, we see that we are losing steam here. And then on a short-term basis, 4-hour chart, we are below the line here. Just stay cautious again with EFA, with that weekly coming down. Again, if any system was perfect, we wouldn't be in the business, so everyone would follow that one system. So no one system is ever going to be perfect, guys, but definitely interesting to see that kind of diverge a little bit for EFA. And then finally, we'll move into AGG, which is bonds. With bonds, AGG, Really seeing this hit this trend line numerous times since August and has not been able to break that numerous times. We thought it would break that in December, and we have not seen that. We've seen more of a decline. Now we're below those moving averages. We do have a really good 200-day moving average towards the top here. Our kind of breakdown line is 112, so we're only 37 cents below that. But overall, we thought we'd see this fund really start to pick up. We saw those bigger indices start to break down. Might start to see that in the new year now. Maybe just jump the gun a little bit early. As you can see with AGG, back in November, it started moving towards the positive with the oscillator. And then about midway through here is where we decided to transition to this fund, AGG. And since then, we have just not done that well with this fund, honestly. It's continued to rise, but we can't get any positive oscillator time out of that. And the PPO line is still below that. So we're kind of waiting and seeing what will happen with that. Again, we only have 2 moves with the TSP funds, so we just want to be careful on where we're at with that. Overall, I'm pretty satisfied with where we're at, though, and I'll show you guys on our scale where we're at. So currently we're sitting with 100% allocation in the F fund for right now for the new year. Kind of risky trying to do that go in the new year, but I just see those bigger, when I see IYY, some of those bigger indices start to turn with their weekly charts. That's just kind of an early indication that we could see some market shift there, just maybe for a little bit. So funds did really well for the year overall, and I'll kind of go a little bit over that. That's kind of a weekly/yearly review for that. I want to bring up my chart, so I'm going to bring the my chart up with the TSP chart. So as you can see, these are the yearly percentages here for TSP. We'll bring mine up. Percentages here, as you can see, for the year, we had the C fund over 31%, the S fund over 27%, I fund over 22%. Pretty impressive. I think we did very well for the year. Like I said, where we ended up not doing well was basically we hit some resistance in the fourth quarter. With that resistance in the fourth quarter, we did lose some gain on our funds. So if I can bring that back up for you, which is right here. Basically what we had, this is my TSP accounting sheet. As you can see, we gained about 17% for the year. Overall, not a bad year. I mean, 17% is really good, but it doesn't match that of the C fund, which was 31%, 27%, or 22%. So we did lag in equities quite a bit this year. We did end up beating bonds by quite a bit. We beat the G fund by quite a bit, and we ended up about the same as the L2030 fund. So that was about 1760. I was about 1749. So about right around the same for a managed active portfolio versus just putting it all in the L fund and letting it go for a balanced portfolio. Not bad overall, guys, but wish we could have done better for the year. So that was kind of our yearly TSP review. Some really good pointers that I'd like to point out is we added compounding interest this year, so that was really a bonus. I want to just thank Scott from the TSP group for that. That's been really beneficial to have that on here. This TSP sheet is online if you guys ever want to use it. I find it extremely helpful. You can kind of put things in there like your base salary and then have the max in there for the year and kind of see how much you need to contribute to max it out for the year. It's really nice that I am BRS, so I do get a match for my TSP, which is awesome. So I was putting in right around $15.88 for the year. I had a little bit of a match here for TSP, which ended up being about $2.80 a month. Overall, guys, even though I did not match the indices that well, we had a great year for putting in TSP funds. We were able to hit the max contribution. So the max contribution for 2019 was $19,000. We hit $18,999.53. So that is a really good goal that we were shooting for. We wanted to max it. Not many people max that, especially at a young age. So I was very impressed that I was able to hit that goal this year. Kudos to me for the year. And then overall, when we look at these blue boxes, which are the interesting things to pay attention to, with the match, we dumped about $22,000 into TSP this year, which is really great. That's above the cap. The way we're able to do that is we put in the max, which is about 19, and then the match goes above that for 22. And then this box over here is what we earned in interest for the year. So for about 17% interest throughout the year, we earned about $6,591 for a total balance of $28,780 into TSP for the year. So really, really good for being 29 years old. I'm pretty impressed with that. Overall, the balance is for the TSP account that I own and manage is $60,464. Some people question if that's legit. I'm going to pull up my TSP account here. So this is the screenshot from my TSP account. As you can see, $60,464.52. So right there with it, we're able to show you the year from the 1st to the January 1st to the December 30th. So basically the entire year, as you can see, gained through the G, F, C, S, and I fund. Didn't take any losses throughout any of those funds. Did very, very well throughout the year, guys, but just didn't match the equity funds for what we wanted it to be. So overall, that's what we have for our TSP. If you guys have any questions about TSP or this sheet, any questions on how I did these things, starting balance or your contributions, what you gained or lost for the month, anything like that, or how I got compound interest, I can show you all that. What we like to do is we like to take our final percentage, which is at 17.5%, and then we look up the inflation rate for 2019 and we compare that. So overall, we got about 15% return after inflation. So that's really good, guys. What an excellent year for TSP. Hats off for the new year. If we could get 15% every year, that would be just incredible. Again, $28,780 that went into TSP this year. Very impressive. Very happy with that. That's kind of my overall general overview for my weekly stock review for TSP and Roth IRA and brokerage accounts, and my yearly review. Like I said, if you guys have any questions, please write those in the comments below. Now I'm going to kind of transition and go into my individual brokerage accounts. I want to go over these. I picked individual stocks this year, and I'll kind of go over kind of what happened with each one of those accounts. I have 3 of them. Kind of show you what happened with that with the same kind of spreadsheet, and we can go from there. But I really do, again, appreciate you guys' support. If you guys like this channel, we're going to be making videos into the new year, all next year, 2020. Please subscribe. So that being said, let's go into the next account. So the next account is my brokerage account. This brokerage account here is an account that I play around with. I put a lot of risk into this. This was mostly invested into Facebook stock, Chipotle stock, AMD, and Boeing for the year. Now, I was in and out of those quite a bit, and as you can see, we averaged about 19% as well for those stocks. So again, right around that TSP percentage. We did a little bit better than TSP with this account. I felt okay with it. We ended up earning about $7,571, but we did have some contributions in there. We contributed about $5,000 to the account for the year, and then $2,300 was an interest for that account. Again, anytime you have a year that's above 10% of the double digits, not sad about that at all. Wish I might have. Next year, we might consider just putting some of these funds in just an S&P 500 fund and letting them go. It is a lot of work managing back and forth and whatnot for every single month. And with all that time, we could just simply put it in an S&P 500 fund and would have done better. So a little disappointed on that. After inflation, we ended up with about 17% for this account. So that was brokerage account number 1. The other account I manage is a Roth IRA account. So I'm going to open that up real quick for year end. And again, you're not seeing December on here. Just those numbers haven't come in just yet, but they didn't change that much. I kept it pretty much in cash for December, so wasn't too much of a change. With this account, this was my best account. If you haven't noticed, again, mostly invested in Facebook and Chipotle for the year. Had a couple losses throughout the year, but had a really good January first quarter and a really good kind of ending quarter here with this account. Instead of sticking with bonds like we did with our TSP fund, being a little more cautious, we were a little more aggressive. And for that fourth quarter, we pulled in about 5%, whereas the first quarter we pulled in almost 27%. And then compounded, we did very, very well. We ended up with about 57% return on this account. That did beat all of markets funds for the year. So we did beat the S&P 500, all TSP funds, and everything under this managed account, which I managed for my Roth IRA. Again, this was mostly invested in Facebook and Chipotle for the year. Felt really good about this account. Really went from quite a balance of, 18,000 here to over 34,000 within a year. So that's really impressive gains. Overall, for the year, I added the max, which was about $6,000. It's about 9% of my paycheck, about $500 a month. I just do it in a lump sum, so I do my tax return, and then I do a little bit towards the end of the year instead of doing $500 each month. And overall, we put in, with the interest and what I put in, over $17,000, $17,852 gained for a 56% gain with inflation on this account. Very well done. Wish I could have invested everything like I invested this account for the year. Very, very impressive. Not something you can do every year, but I was very, very happy with this account. If you guys have questions about this account or what I did with it, you can go ahead and write those in the comments below. And then finally, I'm going to go through my my kind of emergency savings account. It is also invested in a brokerage account. With this account, I have it. It's kind of by a robo manager, so I don't physically manage it. It's managed by Morgan Stanley, and I like to have this account up just to see how the robo manager does versus me. I like to manage like TSP funds versus me versus my managed funds versus like a robo advisor. Kind of compare them all, and it's kind of a competition by the end of the year to see who can beat who. Anyways, this fund didn't do too well. Did decent throughout the year as well. I mean, anytime you're above 10%, I'm not complaining. So in this account, I usually contribute about $200 to $250 every month, and I did just about that for every single month. As you can see here was what I put in for every month, about 5% of my pay, and I contributed about $4,000 to this account for the year. Went from about $7,000, $7,200 to $12,000. So really good gain in this account as well. Ended up gaining $5,600 on this account. $4,000 was mine, then gained $1,600 here for 18% return on the account with compounding. After inflation, it was about 16 ROBA. They also take fees out of this account, so that is one thing I don't really necessarily like, but it's a good account to just try. If you guys don't want to actively manage your account or check into these videos every week, a robo investor is good. Just I would say look for low investment fees. So overall, that's all my investment accounts. I went through 3 different brokerage accounts. I went through 2 brokerage accounts. This one here, which is more of a savings account, my regular brokerage, and then my IRA. Again, those were mostly, the brokerage accounts were mostly invested in Facebook and Chipotle for the year, and then this was invested in a number of S&P 500 funds, ETFs, very general, with about say 75-25 mix of stocks and bonds. So pretty safe portfolio, but still did very, very well for the year. Not bad at all. Overall, that again, guys, that's all the overviews that I have in regards to stocks and what I did in the market. The only other thing I kind of wanted to run you through is I do rental property as well. Some people think rental property is very, very passive and you don't have to do anything with it. That is not necessarily the case. There is a lot of involvement in a rental property, so I'm just going to pull that up and kind of run you through the numbers on that too for an entire year if you're interested. If you're not, you can click the video off right now, but I like showing this to you guys as well. So this is a rental property in South Carolina. I have some renters in there. As you can see, I have the mortgage here, but then there's some other things in here like lights or power, termites, sewer, water, AOH, escrow, and then what the management company charges. Also, just some little things like little fixes that you need throughout the year. And then I do an extra mortgage payment on the house about once a year, and then what my tenants pay me. So overall, when I go through the whole thing for January to December, at the end of the year, I paid about $10,000. The mortgage payment every year or every month is $920. I ended up paying about $10,000, almost about $11,000 in the mortgage this year. A lot of that went towards interest versus principal since we're in the first year of the home. And then all these other expenses really, I like to call them ankle biters, start really adding up. And then towards the end there, I have the $1,000 that I contribute extra to the mortgage. Overall, for the entire year, I paid $15,600 towards that house. The renters ended up paying $13,500. So I was under about $2,000. If I take out that $1,000 payment, is about $1,000 under. A way you would solve that with the mortgage, if you wanted to be in the positive, you'd raise the rental rate up about $100, and then you'd be in the positive. It'd be cash flow positive. That'd be a really good way to have this rental be cash flow positive. Now, these renters have been in here for over a year, and they're really good renters, so I'm not going to end up doing that on them. But that's a way, maybe when the next renters come in, that'd be a way to make sure that this property is in the positive. I'm not losing money on it. And then if you look at the total for the year, as you can see, for the first year here was me just paying the mortgage, so I lost out a little bit there. But overall, only about $5,000 deep into this house, and made some really good progress from going from the balance of 144 to 140 that's against the principal. So doing very well, even though the renters are paying most of the interest towards the bankers and whatnot. I benefit pretty well, and then I did an extra mortgage payment here, so that's also very helpful. That extra mortgage payment actually reduced my total interest off the account by over $2,500, and it reduced over 4 payments. So I'm going to try to continue to do about $1,000, or maybe I was thinking double principal payments for 2020. So overall, that's what a rental property looks like in the year 2019. If you have questions about rental properties, or if you want me to do more things about rental properties, please write that in the comments below. Really enjoyed having this rental for this year. It is pretty much for the most part passive, but there is some involvement in it. I would say pretty low maintenance, and overall I would really like to see this turn positive for next year. So that's my real estate investments, and like I said, I went over all my stock and investments. Is there anything else you guys want me to look into? Top Notch does top-notch reviews on just about anything you can imagine. It doesn't have to be finance or stocks or anything like that, or retirement. It could just be about anything. Really looking to expand the channel. The channel for 2019 didn't do super well. It's not that easy to be a YouTuber in this day and age, especially with a small channel. But we were able to, overall for review for the YouTube channel, we were able to get about 100 subscribers. So 100 subscribers a year, I guess 8 or 9 years I'll be at 1,000. Maybe someday be able to put on ads on the channel or something like that. Or if you guys don't want ads, let me know in the comments below, I guess. But I really do appreciate the 274 subscribers that I do have. And thank you guys for sticking it out with me. Really great year in stocks. Really hope to see another great year in stocks. Again, please like, subscribe, or share the video. And we'll see you guys in the new year. We'll see you guys next time. That's another top-notch video.